The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Didn't we just say the markets are kind of boring? Well, maybe, maybe not. Joining us now to discuss is David Russel. He's Vice President of Market Intelligence at TradeStation. Good morning, David.
Good morning, guys. How you doing?
Well, probably better than the markets at the moment. And that's kind of a question here. You know, we're back down again, right? We're below 30, et cetera. We're back to risk off again. That's the way I see it. But do you agree, disagree? Throw in your two Satoshis here.
Well, at this point, as usual, I'm focused on the S&P 500. And when we look at the market right now, we're squeezing into this interesting range between kind of the lows that we had back in March. And also, if you look all the way back to May of last year, there's about a 100-point range on the S&P that we've rallied up. And now we're sitting there. And we're kind of at a point when it can go either way. And there's a lot of positives that people had kind of started to put into the market. They'd started to see the fact that, we had really sold off. The economy wasn't that bad. There are some signs of inflation improving. But then we just get this deluge of bad news from Microsoft. And then, Target continues with bad news today.
Yeah.
We had it wasn't a downgrade of Apple, but it was, some pretty negative comments on Apple. We had the question of Tesla. So what's happening here, I think, is that there's something else happening beyond just the inflation situation, which is that we went into this quarter knowing earnings were going to be bad. And there's something companies do, which is they kind of say, well, look, expectations are already not great now. So we're going to throw all the bad news out there right now and make it easier for later in the year. And that's kind of what we're setting up for right now. We've seen analysts keep their targets for the overall year, simply moving out the expectations for profit growth and stuff kind of across the entire S&P. So we're in a situation right now where companies are kind of making a decision to prepare people for bad news in the near term, which then makes it easier for good news later. But the problem is the good news is not now. So we've rallied on some degree of optimism, and now we're kind of at this crossroad waiting to see which way we turn. But we're in an interesting 100-point range here in the S&P, and I think traders need to be aware of that.
Yeah, look, the S&P 500 is driven a lot by tech. Some of the biggest companies in the S&P 500 are tech companies, and that's what's been hurt. And that's also bled into the cryptocurrency market, right? People are looking at crypto as a form of tech investing. But as you mentioned, Target is a retail company, and you would expect retail would do a little bit better with inflation because they could raise prices, but they bought their products before the prices went up. But in the case of Target, it looks like they said, hey, look, we have a lot of garbage inventory. The same thing at the Gap and all these clothing companies saying, we bought a lot of stuff anticipating a continuation of the pandemic, and now people's tastes have changed. So we're going to have to get rid of all this excess inventory, dump it out into the market, take some hits, and hopefully make that up in the future. But my question is that because you have these inflation issues coming up now, and you have the war messing with oil prices, it all throws this wrench into the market, into who's going to succeed, and it's beyond just tech. Do you think that that's going to kind of create this environment where the S&P is not necessarily going to do as well as maybe we would have thought, this even with the problem of tech, but that, hey, there are all these idiosyncratic factors that are being thrown at it, from war, as I said, to inflation, and we kind of don't know where these other sectors beyond tech are gonna do.
No, I agree with that. I think we're in a situation now where we had started to see room for optimism, and we've been working through that for the last 4 to 6 weeks, kind of holding these lows around 4,000 on the S&P 500. But the question is, do we have enough energy for the bulls to work higher from here? And when you look at the news in the last week or so, the answer is kind of leaning toward no at this point in time. So, I think that was the key thing, is when you look across other parts of the market, like something like Target, there's just not a lot of areas for real kind of optimism here. And when you start to look at what's going to happen of everything with interest rates and the potential slowing of the economy, that starts hitting all these other areas that have been relatively strong, like in the industrial space and everything else. The very strong dollar we're seeing, that will have ripple effects going through as well. So I agree with that at this point in time. We're in a spot where we've had some optimism, but at the same time, it's that story's getting a little bit old now because we've been hanging our hat on that for the last 4 weeks.
It's focusing on other parts of the world in Asia. I'm wondering what kind of impact and significance are we seeing, from China and the supply chain and the equities markets there and the impact on the rest of the world and crypto?
Well, I think you make an interesting point about China. I've been watching these Chinese stocks recently, and it's interesting because they have not made a low since early March. And you have a situation in China where they had a lot of bad news for most of last year. And now we have a government that is in many ways very different than our own. They have been easing on their monetary policy, and they've been taking steps toward supporting their stock market after a long regulatory crackdown. We're starting to see a lot of relative strength. Yesterday, we had the positive news in Didi. And it's interesting because the Chinese stocks are starting to really stabilize here. Some of the Chinese electric car makers, it's made some big moves yesterday. So there seems to be some movement toward these Chinese stocks. And what's interesting about that is you have a part of the market that technology investors liked. A lot of these Chinese tech stocks were tremendous outperformers back in 2020. They've taken a massive haircut. And now we're at a spot where the big American tech stocks are struggling, and these stocks are starting to show some relative strength. From my perspective, there's a potential for some rotation into these Chinese stocks after a long period of weakness.
So that's a really interesting point about Chinese stocks. Can you maybe tie that a little bit more into how that might affect the crypto market, just the performance of Chinese stocks?
I don't know if there's a whole lot of direct connection there. I view essentially cryptos, like I've mentioned, as being kind of just linked to the NASDAQ overall. And I don't know if there's a lot of link right now of crypto to anything with China.
So let's get back a little bit to interest rates here, because I think that kind of has an effect, though, obviously it's going to have an effect on the dollar, and that in turn will have an effect on currencies, on cryptocurrencies particularly. So we kind of get the sense that the Fed is, I don't want to say pulling back, but it's sort of giving a different message than it was a few weeks ago in terms of where it's going with interest rates here, or how it's going to try and curb inflation to do that. What's your take? I mean, do you think that we're going to continue on track as we were a few weeks ago, or do you think that we're getting more and more signs from the Fed that maybe we don't want to rush too much into pulling back? I mean, I don't want to quote Cardi B, but as she mentioned before, as she said on Twitter, she said, when are they going to announce the next recession? We had a negative quarter. People are anticipating this quarter is going to be a little bit better. But, I mean, is she right? Are we going to get a recession if rates continue as they are? Do you think that the Fed might just say, man, let's not get too crazy here?
Nah, I think the Fed, the market got extremely, when you look at the Fed fund futures data, it gets ahead of itself and then it kind of resets. I think the Fed's been pretty consistent that they're going to have multiple 50 basis point hikes, that they're going to keep raising interest rates. And if you look at it, from my perspective, the economy continues to show a lot of strength here. I think it's important to realize that the economic gains we're seeing now are not sensitive to interest rates. We have a little bit of that in the housing market, but even then, there's not a lot of sense that home prices are going to go down a lot. You're simply going to see a slowing of purchases and things. So we have an economy now that's really resetting after a long period of relatively low inventories. We're seeing a long-term improvement in wages in parts of the economy that have been weak for a long time. So this right now we still have Fed funds rate under 1%. So I mean, you have significant just normalization that's going right now, and I think the Fed knows they need to get their interest rates back to a level that is just normal with history. So right now I don't see any real sign of the Fed slowing down.
Mm-hmm. Just wanted to ask you more about crypto. You're in a really interesting position at TradeStation, seeing how people trade, the flows, institutional investors, retail. So I wonder, what are you seeing, in terms of those flows, and what are some of the more popular funds, or, what are people taking their money out of?
Well, I'll tell you, at this point, I don't work, directly with the TradeStation crypto. I work for the stock and security side. I'm not sure exactly what they've been doing there, but I can tell you in the equity market, we have seen, it's interesting because if you go back to the time when there were meme stocks, people were trading a lot of small companies. And last month, we saw a real focus on the big, equity products or the index products like QQQ and the different inverse. There's a few leverage ones that are all tracking the overall indexes, which is exactly what you'd expect in a period of volatility. And it's what you'd kind of see in a period of weakness. So I think it's interesting to see right now that people have been mostly focused on the big index things, and I think that's dominating attention. But I will also mention that Advanced Micro Devices is another company that people have been really focused on, and they have an investor day this week. So that's been one area where people have been very focused.
Yeah. Well, we have seen miners, equities really getting pummeled since when comparing year-to-date returns. So there's that. And also, just quickly, Treasury Secretary Janet Yellen is speaking before Congress today. I wonder, are you watching out for anything? Could that any impact on the markets there?
No, I'm not sure. Like with her, I mean, right now my focus is on the inflation data on Friday, and then the Fed next week. I think those are, from my perspective, those are just the big things we're holding our breaths for.
All right, David. Thank you so much for joining us this morning. Appreciate your insights. That was TradeStation Group Vice President of Market Intelligence, David Russel.